This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 8:52 p.m. on Thursday evening, October 17, 2019. This is one of the weekly strategic webinar videocast broadcasts that we do to keep all our members, free trial subscribers, and anyone out there with the internet connection who's going to be listening to this appraised of the realities of what is happening with the U.S. financial markets, and of course offer some strategic insight into individual stocks as well as market directional bias, specific levels, and all kinds of great stuff that help people make money. We have one of our members who just joined, Mike. Welcome, and anyone else who will be coming in.
Hey Frank, how are you?
I'm good, thank you. So just continuing with the session. So everything's good. Thank you, Mike. So bottom line is I am going to, as always, well, before I go any further, full disclosure, this is purely for financial education, not for any solicitation or advice. Session will be uploaded to the Google YouTube channel, which is a reservoir of absolutely valuable information for traders to act on, not real-time alerts, but predictive forecasts on both stocks and overall markets, which are extremely helpful because without them, you're not going to be trading properly. And that's a polite way of saying you're going to be screwing up a lot. So very important that the Google YouTube channel and all the broadcasts in there, mostly twice a week, sometimes 3 times a week, depending on market conditions, that all of you certainly make use of. And you can see here that this is our Google channel with broadcasts every single week. There are resources for new traders as well as older traders who have been with us who want to brush up on their skills. We have a playlist called New Member Intro Video. We have one second here, new member intro, and also introductory. Let me see here. There's one more. Oh boy. All right. Good evening, Clueless Trading members. So we'll probably have a few more. Okay. So anyway, there's a. It's all under playlist. There's the new member intro and introductory playlist, and there's some very valuable content up there for people who want to brush up on their technical skills. And it's all visual, explained in very simple terms. There are samples of advanced coaching sessions which some members participate in. It's a paid service, very small fees, extremely helpful so that you can manage your own trades better, not just get into a trade and then screw up by selling at the wrong time because the market is going haywire, i.e. what we call structured volatility. So just like any other craft, you got to practice the right things, and then at one point things kind of fall in place. It's not going to be perfect because the markets are not perfect. Markets are not linear. They are volatile. They go up in waves. You can see that very clearly. So, but in order to look, there's an old saying in the business, right, and in life, everyone's a genius when in a bull market. All right, everyone thinks, oh yeah, I'm buying this, it's going higher. What's the big deal? Well, the big deal is that markets don't go up in a straight line, and we have massive bouts of volatility, which cause anxiety, which cause pain, which cause mental disturbance in mostly retail emotional traders, and it's very hard to manage. You hear the biggest guys saying, we can't trade this market. This market is completely, bonkers. And time to time, you go through those massive phases. And it's always going to be like this. But if you are a tactical trader trading off our structured charts, you'll be in a much better position to know when to lay low, when to have more cash on the sidelines, when to trade fast, when to trade slow, and make some very decent profits, because we trade every single day. I don't think there's been one single day when I've said, okay, we're not trading. So whether you're an active trader or a swing trader, keep in mind that it's completely up to you how you want to trade. I want to point out one thing very, very important. It's very simple. Everyone's got their own style. Everyone's got their own risk level. So you got to find the niche that you fall in. And you won't find it. Most people can't find it on their own. They need some guidance. Simple as that. Okay? So that's the guidance you get from our resources. That's the guidance you get, not advice, guidance that you get from the advanced coaching sessions, the ACS sessions, which are very specialized guidance. And those will help you keep your hands on the steering wheel when it gets really stormy out there and you're not going to fall over a cliff. And that's pretty much what happens to most RET or retail emotional traders, even institutional traders and hedge funds and stuff when the market goes haywire. Now, even when the markets go haywire, we stay focused. We can't call every direction in the market every single day or intraday, but we do call the general direction very well, as you all know, and make some money. So, good stuff. Google YouTube as a major resource, just as a prominent reminder. The Instagram channel to see some exciting options charts on some of the highlights of what we have done. Not a real-time delivery on the Instagram, but simply at the end of the day, just to highlight some of the big trades that we have done. And it's fun to watch because those are real trades. And hopefully you guys were in them. You can be from point A to point Z exactly, but even if you get the majority of the meat in the middle, you're doing extremely well. Intraday, we're giving out trades on ROKU, just to give one example, or whether it be GameStop, which is really not a day trading stock, but sometimes you can because the calls go from 20 cents to 40 cents. That's 100% on your money. So if you had a bunch of them, you just doubled your money. So there's a lot of different trades that we give for all kinds of traders, and it's up to you to figure out what you want to do. I am generally I'm both a swing trader and a day trader. Mostly a swing trader, limited day trading, because I'm not a 5-minute trader. But if things are moving fast, I'll definitely be a 5-minute trader, and I share those ideas with you as much as I can. And I do a lot of trades on the side, which I can't post because of time constraints, obviously. So find your own style, find your own niche, use Clueless Trading technical, very, very precise technical charts as a very efficient tool, and you're going to start to see things happen. It is never too late to make money in the stock market. Always remember that. When you go to bed, you got to tell yourself that. It is never too late to turn your fortunes around. I hear so many, a lot of people come in, yeah, I was trading, I was doing really well, then I lost everything, or I lost most of it. Okay, understood. Most of it was because you were an emotional trader, and they agree. Yes, my emotions got the best of me because I didn't quite understand what the market was doing. That's what I hear a lot. Great. So you're in the right spot. Well, we're going to give you some phenomenal tools, visual tools. We're going to teach you some basics on some technicals, and you're going to basically use those. And I'll do the hard work of sorry about that. I'm going to do the hard work of doing the predictive stuff and all that, calling the shots, and you're going to basically try to get the messaging that comes out of my alerts and do what you need to do. It is never too late to make money. Never. Because markets are going to get very overbought very soon. No question about it. And you can see that very clearly, that at that point there's going to be another bunch of weeks, not every day, bunch of weeks where the market's going to pull back. And after everything that we have gone through, specifically since January of 2018, where the real volatility started, 1,000-point type of drops, 600-point type of drops in the blink of an eye, we're ready for anything. You have gone through the most horrific hand-to-hand combat, like I always like to say, Fallujah style in Iraq, where our boys won, and it was difficult. It's like hand-to-hand, house-to-house. It's crazy stuff, but we won. So we do that hand-to-hand combat, what we call volatility, trading, profit maximization in volatile markets. Fancy way of saying we trade the volatility. We know where we can drop to. We hold our nose, buy those tactical lows, and we make money. I repeat again before I get into the charts. It is never too late to turn your account around. It always helps when you have a bigger account, but if you're a novice with a bigger account, I can assure you, without the right training and the way we approach the markets in a very robotic way, you're going to lose most of it. So consider yourself lucky that you're not trading with a larger account. Best to start trading with a smaller account. Do as much as you can. Let that small account grow. And if that blows up, at least you lost a little bit of money. But if you take a big account and you trade options, options are risky business. That's why the rewards are so juicy. You know, you don't get 2, 3, 400%, 1,000% type of deals that we give out as alerts on trading stocks. The options are your risk capital. So best to start small, get that a little bit bigger, do the study, and try to understand what we're putting out there. Hopefully sit and subscribe to the paid ACS advanced coaching sessions, and you're good to go. It's really as simple a formula as I can give you. The mental part of it will only start to get balanced, and you'll be a much more mentally stable robotic trader only if you sharpen your tactical skills. Without that, never. Never. So just remember that. Words of wisdom, all right? Words of wisdom. I get hit too. The market's just suddenly just, I don't get hit? Sure I do. But I use my time-proven methods of dollar cost averaging, of having cash on the side to regroup and make 3 times more back. The rule of the thumb is you got to make 3 times more, not 2 times more, 3 times more to the one-time loss. So if you lose, let's say 10%, hey, you lose 10% in like half a second, then you got to make 30%, just as an example. That's the rule of the thumb. 3 steps forward, 1 step backward. And you're going to see how your account progresses. 3 steps forward, 1 step backward. What RET, retail emotional traders, do consistently, it's 3 steps back, 1 step forward, and 3 steps backwards. And then the mind just becomes the fog of war, right? It's just like mush. And that's what the algorithmic high-frequency trading black box robots are meant to do, to make your mind a mush. Finished. Your confidence goes, and you blame the market, you blame say trading, whatever, and it doesn't matter. What you have to do is you have to blame yourself for not having the right weapons of war, i.e. tactical tools, understanding the messaging coming out of the charts, be patient, and do what you need to do. Patience and discipline are words used by marketing companies like no one's business. So let me finish. So you go 1 step back forward, 3 steps backward. This is what your account's doing. Going up a little bit, giving back. Because the markets are the business of taking money out of you. And these machines are. So the key is that, I lost my chain of thought there for a minute. Hi, Jody. The key is that you gotta basically practice a lot of these things. But here's what I was going to say. A lot of trading, it's the nature of marketing, right? Nature of the beast, that they like to use the word patience. I'm going to say P, discipline, exact methods. If you do this 1, 2, 3, this is what you're going to make money on. Let's call it PDM. Patience, discipline. What do you call? Stay calm, like mental methods, right? It's all garbage. You cannot get patience, discipline, and mental stability to be a trader without understanding the dynamic tactical way of what we call the clueless say trading way. You cannot. It's impossible. So all this patience, you think these comes naturally? How are you going to have discipline if you don't understand how these mechanical markets are working, or what the messaging is coming out of my very, very precise individual stock charts, as well as market charts, the S&P 500, the QQQ, the DIA, the IWM. So you got to have a tactical approach, which will help you. The more you increase this quotient, the emotional quotient, or EQ, which is basically the enemy of every trader, of every investor. I'm going to say EQ, emotional quotient, is start to go down. You could minimize this even on the worst days, and you're going to increase your real tactical discipline, what we call TD, right? This is a little acronym, TD. And not TD Ameritrade, but TD. It's a tactical discipline higher. So your overall good cholesterol goes higher as a trader, and your bad cholesterol, which is your emotional quotient, will go lower. And that's how your account goes from here to here through all the volatility. And you start to get that level of confidence and things fall in place. Enough said. Let's get down to it. So, had to share that with you guys, you know. Even to this day, I stick to the basic principles, what I tell myself. Everything that I put out there, the clueless day trading motto, or motivating people, I believe in it. I believe in it. What you see is what you get. WYSIWYG, a term coined back in the 80s when the PC was born. What you see is what you get. And you will see the difference it makes in your life, for your family, for yourself. All right, so some broad strokes here without getting too nitty-gritty. You want the nitty-gritty stuff, go spend some time going through the Twitter feed, private Twitter feed for paid members, so that you see all the details and the comments and stuff like that. Here's some here. We started here on the bottom of a multi-month bottom, which was the Christmas Eve massacre. Huge surge into February, March. Then another surge, smaller one. It's all waves. You know, this is wave 1, 2, 3, 4, wave 5. Generally, wave 5, Elliott wave theory says that's the end of the wave. So if you want to look at it this way, this is wave 1. Okay? 2, a corrective phase, a bull flag. 3, so this is 2. So everything moves in 5-wave patterns. And there are minute waves in between that, sub waves. Forget all that. I'm not an Elliott wave specialist, but I look at the bigger picture. So you want to look it up, go to Investopedia, study Elliott wave theory. You know, there are guys who basically devote their lives to it. I don't know, you know. I'm not. I just like to look at it once in a while. So this is wave 3. This is wave 4. Still another bull flag, and wave 5. Okay, and then it begins again. Wave 1, 2, 3. We get 5, maybe 4. Maybe call this 5. A double top. Then it starts again. 1. This is where it got really choppy back in August, right? We were on a 600, and we walked through this very well, because I walked you guys all through it as it was going on, and it was difficult, and we still made money. Not every single day, but weekly we did. We went through this, boom, 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 and it continued for months, for 1 month basically, 30-day period, and then we broke out. It was like a complex triple bottom, triple top, complex W, if you want to look at it that way. So I don't even know how to put the waves on this one. And then this is where we are. So simplistically speaking, we want to go test the 301 level, which are the previous highs. That's what it looks like. Okay, looks very likely right there, which is a massive resistance, ladies and gentlemen. 302.63. I even put it out there. Okay, that's a lot of money. You know, every time the market's up $100, you're up 60-70% on the SPY calls or more, depending on where you cost average down, where you bought it. So even this move here from where we had a red candle today, small one, still on an uptrend, and we got a little bit more to go. What's a little bit more to go? Maybe another 300-400 points. Let's take a look. Let's take a peek under the hood. And please stop me with any questions you might have. So you got the red bar today. Today was a sell day, even though we had monster winners today. Monster. I don't even want to repeat some of them. ROKU was one of the best. Shop was great. what do you call it? Even the little puny GameStop was fantastic. Those calls, like, they go up like 20 cents. That's like 100% on your money. Then we had huge winners intraday after we made money on that just a day ago, 2 days ago. United Healthcare. Look at the HMOs. Like beauties. They're just running 50, 60% intraday. Humana. Medco. Well, Medco's medicines company, different one. The trio, the three musketeers are Anthem Health, United Health, Humana. Then we had other speculative movers, all real good, real solid companies like Guidant Health, which I think can go a lot higher, probably get bought out. So a lot of them moving. We had earnings winners. We had Amazon calls, 1950s, for God's sakes. 1950. Netflix was a great winner, only if you sold it quick. That's what you got to do with Netflix. Told you what it was going to do, and that's exactly what it did. We're going to take a quick look at it tonight, too. So it doesn't matter that we had a red candle here. Even though the markets were higher, we had a red volume day on the SPYs. You can see that. So where do we stand here on the internals? So it was kind of an what's the term they use? It was like a nothing day with lots of winners underneath the surface. So, it's a nothing burger, right? That's what I was looking for. It's a nothing burger. So look at what's going on here. This is what I said. When you start to see the stochastics turn all the way from here, you gotta stay long. Yes, you're gonna get real chop during the day. That's what volatility is supposed to do. But all of a sudden, everything falls into place. We have a Brexit deal on the way. President Trump did what he did, which I knew he was going to do. I mentioned that on my webinars a couple of times, that this was it had to be a win-win situation. Phase one deal is in the works. The media, all media, not just the CNNs of the world, they're all criticizing him. I want to plug in one thing for Donald. What he did with Chinese, hats off. Congratulations. Excellent. And it'll progress. Now, unless they completely backfire and they both walk away and say, start calling each other names again, that's a different story. I don't think that's going to happen. Second thing, every media, his own party, like everybody, criticizing President Trump for what he did with Turkey, giving Turkey a break to go invade the part of the Kurdish. It's called the PKK. They're a very vicious group. Kurds are not just one people. I mean, there's one group. There's a lot of fractional group which are real terrorists. Even he mentioned that at the press conference. The press conference, President Trump said, you guys don't know the whole story. The Turks had to do that. I don't want to get into it right now. I have good Turkish friends. That's why I know the history of what's going on. Okay? So he supported him. And President Erdogan, who's a tough guy, and President Trump likes him. Good. Turkey's a NATO ally. We have one of our largest Air Force bases in Çirlik. I think that's what it's called. Turkey. Where we have B-50, B-1, and B-2 bombers placed there. Where we use that in case there's a problem in the Middle East. We've done that before. So why the hell are we going to kick Turkey in the face? If they want to take out some bad guys that are killing their own people. Exactly. But he went and did a deal. President Trump, Vice President Pence was there. Pompeo was there. Secretary of State. Amazing. Fantastic. Hats off. All right? And everybody you hear, from Lindsey Graham to everybody, it's so bad what he did. He's like innocent people die. Yeah, right. It's all garbage. Did the great thing, Donald. Good for you. Congratulations. And I said that the other day, too. I posted that. He's correct. All right. Let's move on. So back to technicals. So the markets were relieved on that, too. Like, okay, there's not going to be a full-fledged, economic war against Turkey, and it's a major regional power. No kidding, right? And Middle East type of flare up. No, done, gone. President Trump was correct. What he did. Americans don't understand world politics. Most of them don't. Most majority don't. Obviously, I've said that before. And you don't want to sit there and study Kurdish history and then why the Turks hate some of the Kurds and why the Kurds get really vicious and blah blah blah. Forget it. It's not our business. It is our business because our troops are there. All right, now it's solved. Congratulations, President Trump. So now let's look at our favorite and most simplistic indicator, the full stochastics. What's going on here? Said that 100 times. I'll keep on saying it 100 times. It's really as simple as that. It starts to turn. You want to stay long. And as it climbs higher, you scale out some profits. It's not like you just hold something and say, okay, I know it's going to go there. We never know if it's exactly going to go there, which even though it does almost 100% of the time, but along the way, it can do this. So get this little burps. Market opens up 100 points, 150 points, take down some profits. Sit back a little bit, look at the lurch coming out, use your own ideas, buy back a little bit. The smart thing would be to buy back sometimes, depending on the day, after 2 p.m. or after the European markets close at 12:30 in the afternoon, or wait till 3 to see whether the algos really act up. But most of it depends on the background of what is happening in the market. Right now, the background with the great job that President Trump did with the Chinese phase 1 deal coming up, the great job that he did with the Turkey, Kurdish Syria situation, I believe that the markets are in a good mood. And I can feel it. I've been doing this long enough to know it. That's the reason the markets are not going haywire. And good earnings are being presented with massive movers. And bad earnings like crappy IBM, which I should have shorted that, IBM's like such a legacy company, it's not even funny. Instead, we went with the winners. So it's a good feeling. So the markets are going to be, so I'm looking at stocks that are coming off the bottom a lot because those are the ones who are going to play catch up. The software names are going to play catch up, like Shopify. Already we've made money on that. Alta is good playing catch up. Already making money on it. TTD, Trade Desk, coming off the bottom. Already making money off it. ROKU, major momentum play. We caught it at the bottom. Still making money on it. Okay? Apple making new highs. I'm like, man, it's probably going to go to 240, so it's 5 points from here. I'd rather, not that I don't trade Apple, we do, but things like TTD, I'll put it up on the screen, would be something that's called huge upside. So coming back to this, without digressing too much, this is now it's in severe overbought territory. So this is now what's going to start happening. Now we could move sideways a little bit longer. I'll show you the SPX 533 weekly chart, which shows we probably have another 1 to 2 weeks of a run before the market corrects, and corrects hard. Okay? So that's all. Now, individual stocks, a lot of them are coming off the bottom. They'll be affected if the markets are down 800 points on a certain day, but they still have room to move. So this is now an overbought zone, and just because it went through overbought zone doesn't mean it's going to crash tomorrow. I better not, eat my words, but my feed, I told you, a monthly office expiration is tomorrow. We might get a little turbulence first part of next week. Then you get the rush into the month-end window dressing that kicks off. You guys might want to write the date down. That kicks off somewhere around the 23rd, 24th, 1 week from now, and then or 23rd, 24th maybe. So basically, you got 1, 2, 3, 4, 5, 6, 7 till Halloween, till the 31st. You get a nice overall move higher as mutual fund managers and primarily and hedge fund managers spruce up their portfolios by doing what they call window dressing, which I've explained many times. They buy stocks they don't own to show that they own it. So when their quarterly reports go out, and this is an extremely powerful quarter because this is basically end of their fiscal year, October 31st. So they want to make sure, and month end, they want to make sure that they show they own those stocks. So people are going to be impressed. What a scam move, right? But it's been going on forever. It's called window dressing. So stocks with high beta, like some of these high moving stocks, which are coming off the bottom or the ones which have moved up already get stuffed into the books. So they artificially buy it. All right? And they get a big move higher. Roku's probably going to be one of those candidates. I would be surprised if Roku goes to 160, 180. Seriously. He's got good fundamentals, but more important, he's got good momentum. So that's it. Nothing more to see here. This is great. Getting overbought. So we got to keep an eye on that. This is still far from overbought. You get overbought around 177. We haven't even crossed 100 yet, or 98. Yeah, we haven't crossed 100 on the McClellan oscillator, our favorite McClellan oscillator. And then you got 3 bars only on the histograms, MACD. You don't need to know anything about the market and stuff. Just follow these things. Seriously. You got a crossover here. Last time we had a bar crossover, it went from 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Somewhere between 11 and 12 days. And we are only on the 3rd day. When was the last day? This was looking back since this type of pattern emerged, not this one. This type of pattern emerged. It always goes on for a whole bunch of days. This is only the 3rd day. Right? There you go. And we just got the crossover 3 days ago. You don't need to listen to some hotshot guru on CNBC who is wrong 90% of the time. You just track our charts and decide what you want to do. So that's your SPY. Let's look at the SPX. Same structure, obviously, but they're drawn in a slightly different way. This is showing me a little bit more. We have a gaping, rising, almost 45-degree angle here. This is very powerful, very similar to here. And the markets went up for a whole bunch of days after that. So that's what I'm thinking as we are heading to, for reasons that I just explained to you, as we are heading towards the latter part of the month. 1 or 2 of those days, 3 of days, you're going to get that big push down. But those are buying opportunities. As long as, which I know you guys know the answer, the stochastics on the swing side still remain on an upward trajectory. Again, this is the same. We're only the 3rd day. So this is showing more serious angle, trajectory, a serious bull flag. Remember, there are all kinds of bull flags. That's a bull flag. That's a bull flag. That's a bull flag. And this is the best. And that's what we're seeing on the pattern, on the underlying full stochastics indicator.
This conference will now be recorded.
All of a sudden, go to meeting, cut me off. I got to set the time limit, I guess. It went over half an hour. That's strange. Okay, so that's it. So this is the upper end. If things go right, because remember, President Trump is going to be meeting President Xi and Santiago at the, is it the G7 summit? I can't remember. No, it's the APEC summit. I forget. The big summit that he's meeting President Xi where he wants to sign the deal, which is a great thing to do. Then we're going to bust a move. We're going to bust a move. This huge W will break out. Remember, the more times you keep on hitting the upper end, which is around 30, around there, right? Then the ceiling gets weaker and you break out. So we shall see. We shall see. Lots of our indicators will show whether it's going to do that or not. Let's take a look at the weekly, which will give us a better thing. A weekly, seriously scary if you're a dogmatic short. I mean, seriously scary, guys, all right? For shorts. This is a massive ascending triangle. So was the other one, daily. But this is your weekly chart. And there's a bunch of stuff going on here, which is pretty serious. One, let's take a look at the internals. This is wants to get really overbought. That's around 100. This is a weekly. So it's showing you a much longer term picture. That means we're going to bust a move towards 3100. That's what it's showing us. Remember, this is an ascending triangle. Ascending triangles generally, depending on the underlying indicators and the overall market condition, market mood, which I said is good. Don't listen to all the garbage out there. The market mood is good. There are trillions of dollars still sitting on the sidelines. RET, retail emotional traders, hedge funds, institutions, they're all in the same frigging scared boat. Okay? That includes many of our members. I don't know what they're waiting for. So anyway, it's always the same old story, like I say. That money's going to come in. That money's going to come into the market. Of course, you're going to get some volatility. So this ascending triangle, in my opinion, flat top like this, will break out. Now, before it breaks out, it might pull back a little bit, right? 200, 300, 400 points. Big deal. Big deal. We know what the supports are. The orange line is always the 34-day moving average, 29.10. A 50-day moving average is 28.28. That's a long way down. I don't particularly like it if it breaks below the 34-day moving average. I'll certainly be on a bearish short bias if that happens. But this is looking good. Now let's take a look at the McClellan oscillator. That's looking good. It hasn't crossed over. It's at 85. It's crossed over 100. This one is a tougher read on the weekly because I don't see any green bars yet. But once I start seeing that, the market's going to be making new highs. So let's see. But the overall structure here looks good. Looks good. Now, there's another line that I can draw here, which will make things very precise, is this. And that is not an ascending triangle. That, ladies and gentlemen, is a rising wedge. And all of you know by now that there, upper end of the rising wedge is around 30.60. So the most we can get to, and that's the way I'm looking at it, is we're going to get towards this range here, which is in that upper Bollinger, upper rising wedge is around 30.60. We closed at around 3,000, yeah, 2,998. Let's call it 3,000. So 60 points times 8, another 500 points. We're done. Done meaning the market's ready to correct nicely because a rising wedge does this, right? This. And then what happens? Gets to the top and then pulls back. And it becomes a galloping horse pattern. Same old patterns repeat themselves. It is a large bull flag, scares the living daylights out of everybody. You still hear the same old naysayers. And then, boom, breaks out. As long as the primary trend remains intact over this zone. Simple as that, guys. But when it comes to the timeliness of the entries and the exits and all this stuff, you got to rely on clueless trading. That's my job. And you know I do I work real hard to provide absolute superior predictive forecast information, alerts, stocks, markets. Can't get any better than this. You really can't. The day I turn really stupid is the day you guys say, you know what, see you later. But till you guys feel that I haven't turned that stupid, then stick with us, get us referrals. Let's get big. Let's get big as a community. And we need all your help to do that. Okay. Now, a lot of stocks coming out with earnings. Lots. So when I put the earnings stuff out there, grab a few if you like. It can change your thing. There are earnings reversals after they drop. There are earnings that pop up and just boom, sell them first thing in the morning. There's a lot of them. And so let's take a look at an upcoming earnings on NVDA, which got a massive upgrade the other day, which certainly helps. So this is NVIDIA's long-term chart, right? Everything internally is fantastic. Look at that. Very nice. Even when NVIDIA was stuck between 125 and 200, the internals were suggesting all the way from down here, they were climbing higher. even though the stock was fluctuating 75 points. We were trading at certain times of the week, going all the way back to February of 2019. So bottom line is, now it's gaining real momentum. With the China deal in the works, it's just serious stuff. So we'll do the simple math. Do you know the answer? Around here, it's let's call it 194. Well, it is 194. Around here, it's around 120. Edit property, show the price on the left, 124, 194. That's 70 points. That's 70 points. This band. Boom, boom, boom. Okay? 70 points with, if it does break out, the stock is going to go back towards its highs, or at least 240, 260. That's a lot. Maybe you can try it out. Go a couple of months out and buy some 240 calls. Let the stock options go as the stock catches up, and you have enough time. Try that. So you got 70 points. So to be exact, 194 plus 70 is 264 right there. That's good as going back to 280. So let's not get that optimistic. I'm just giving you a range breakout, right? And each of these were massive multi-billion-dollar sells. Hedge funds blowing up, panic selling, you name it. That was last October to December. So bottom line is, if you look at the longer term chart, the stock really hasn't even done anything. All it's done is go back to April of 2019. And here we are, May, June, July, August, September, October. 6 months later, we are just kissing that same level. So here there's going to be some vacillation. This is a major resistance. But like I said, look at my shorter term charts in NVDA that I'm going to be starting putting up. I know I have some older ones too. I need to update that. And you can trade this baby. 220? Yeah, 220 is the first mark. 20 points. I say it does that on earnings. Let's take a look at ROKU. I know you've seen this chart many times. This is as bullish as you can get. Look at the size of these candles. Like holy ROKU. Look at that. And the most powerful part is, which I kept on highlighting for you guys, said it was going to happen, is we broke above. Remember, this is a wide channel, this. Right? Look at that. When it broke out of this, it went berserk. Then it went berserk down. And then I said buy it around here. I didn't say 98, but I said between 110. Where did the stock go to? The stock went to 98. I told you guys that it was a buy somewhere between 110 to 120. Before 120, 110. I can't remember. It's all there. So now, if you just visually look at it, what does it look like? The stock's all of a sudden, anything can happen, but I'm just saying, it doesn't look like on the surface that the stock's all of a sudden going to turn around and crash and burn here. Sure, it can. They might have ROKU, I don't know, whatever reason could be. The massive analyst downgrade, Citron shorting the stock, that's good for a 10-point drop. That's a short funds, short guy, Andrew left. Then, or all of ROKU's boxes, ROKU boxes got, I'm trying to say something funny, but it's not really coming to me because I'm tired. ROKU boxes got food poisoning, like whatever it is, okay? They got salmonella. That's what I was looking for. No, the ROKU boxes don't get salmonella poisoning. So bottom line is, I'm playing it level by level, and it's working beautifully. But these candles are serious stuff. So if I look at it on the daily, and this is serious stuff too, because if this starts to turn around and go, there's still room to buy. That's all I'm trying to say. Because if some of you are just sitting there watching other people make money, and other people like many of our members, and all the alerts and stuff that I'm putting through, then It's not fun, right? It's really not fun watching other people make money, especially when it's literally a giveaway. That's a painful thing, but maybe some people are immune to pain, so they'll just like other people making money while they just sit around and do nothing or lose money. So don't do that. It's a bad habit, guys. So bottom line is, this is starting to turn. What if it actually crosses? The stock is going to be all the way up to 150. What's 10 points for ROKU? Nothing. Nothing. What's this level here? 176. That's 36 points from here. If the stock can go up $6, $7 every other day, it's not too far that it gets back to 177. I don't know if it will be, but pattern-wise, yeah, looks good. But it is a volatile stock, and it will drop 3-4 points for no reason in minutes. But as long as the swing charts are pointing in the right direction, I'll be a buyer on those dips and a seller on the rips. If you look at the daily, now you'll see why those lines were drawn. These dotted lines are gap fills. So here's one gap fill at around 159. This was a major drop-off point. You can call that a right shoulder. That's 152. We have entered over we're broken out over this uptrend channel, which we're broken below. And so I'm basically I'm playing it in increments of $5 to $7 and move the strikes higher. That's all. It's not rocket science, guys. ROKU calls don't move as quickly as Netflix or Apple. They are less elastic. The correlation, the gamma is less. So the stock can move. The premiums are a little bit high. So you can't buy it way out of the money and expect that to be a double just because the stock's up 6. You got to buy a little bit closer to the money and be a little bit more patient. You get on the ROKU type of thing, you get 60%, 70%, not 400% type of thing, just so you know. But I'll take it. I'll take 60% 3 times a week. So will you guys. So everything is okay. And the best part is it just today, not today. Actually, it did that on the 15th. It broke above the red line, which is the 50-day moving average, recaptured it back. Yesterday, it was a standard green hammer. I said buy, right? It was a doji. Everything was pointing higher, but it was a doji, some profit taking. See, all along the way, there are days that the stock's down like from 124 down to 117, like $6, $7. Just remember that. To trade these type of stocks, you have to understand their characteristics. I'm just helping you understand the characteristics. Didn't matter. All signals were pointing higher, but there was short-term volatility on a certain particular day. Didn't matter. Those are buying opportunities. So what's good is 3 days in a row, it's above the 50-day moving average. Today, it retested the 50, came down to 130, closed at 139. Told you guys to buy it when I saw the turn and earlier. I hope some of you guys did. All right. So this is good. Staying above the 50 is a very positive sign. Very positive sign. And then the upper gap here is kind of a gap. Yeah, is around 146, 147. Now the 6, 7 points, take down some profits. Like I say, don't fear the markets. The only thing you have to fear are the little critters, the demons in your head and your baggage. That's the only thing you got to fear. Don't fear the markets. Especially after being with Clueless A Trading, you know very well there are scary times. But at least we know what the demons are in the market. The problem is, do you know what the demons are in your head? So throw in a stock, Jody, Mike, so I can wrap this up. There are lots of earnings coming up, so keep posted. Let's take a look at our TTD. Jody, what stock do you want to look at? TTD. Oh, I like this. 50-day moving average, 221. I told you guys. They just suddenly dropped the stock yesterday because a lot of software stocks were down because of Workday, I believe, was down quite a bit. But Workday is a supply chain management, office automation, or a flow management type of company, right? cloud management. What does TTD have to do with it? Trade Desk is a programmatic trading, programmatic ads, digital ads for Google and for Amazon. They have nothing to do with the cloud and workflow management. But it's a software stock, so it got dropped. And today it started to rise. So Jody, Mike, you guys have no stock that you want me to look at? So this one I'm good for. I would say it's going to go to 240. 40 points from here. That's 20% higher. I believe it happens. 50-day moving average is 220. Calls are not that crazy expensive. A great trade. Now, it's a software stock, so it got overbought, so it pulled back a little bit. We have to watch that. But I'm still going for 220. Best case scenario, 240. I ask again, Jody or Mike, do you guys want to look at any stocks? Have me look at any stock? No? Okay. Lots of good stuff. Swing trades like Marathon Petroleum, moving nicely. Lots of them. We can't buy all of them, but we can buy a good selection. Don't overload in one stock or another. Spread your wealth, do a basket type of strategy, you're going to be fine. Markets are always going to be volatile. That's why you have me, to keep you guys calm. Not change your diapers, but keep you calm. On that note, thank you for attending. God bless you all. Have a great weekend. Thank God for every day He gives us. And I mean that. Let's make money. Believe in America. President Trump, 2 big scores. Congratulations. China and this diffusing the tension, the war in Turkey and the Kurds and Syria. Good stuff. More good things to come. 90% of the public and 90% of hedge fund managers, or maybe 70% mutual funds, all the institutional so-called smart money, bearish. Great stuff as you enter earnings season, my opinion, because it's easy to beat lowered numbers. All these analysts have lowered numbers on companies big time. So I'll go with the fact that a small beat can make things move a lot higher. So that's it. Have a great evening. See you guys tomorrow. God bless you all. Thank you, Mike. Thank you, Jody.